All right, so you've given us this stack of documents all about Mamata Machinery.
Yeah.
Looks like they're gearing up for an IPO.
Mm-hmm.
And you want to know what's important, the things that make this company,
Well, stuff that makes them tick.
yeah, what makes this company tick. So
Yeah.
let's dive in.
Okay.
We've got what looks like an early draft of a prospectus,
Mm-hmm.
and then what looks like a more updated red herring prospectus. So
Yeah. These red herring prospectuses are super valuable.
it's like we're getting a sneak peek.
Yeah. Yeah. They give
Just
you.
down the curtain.
They're meant to give investors, potential investors, a really clear picture of what the company's business is, how their financials look, and any of the risks involved.
So our mission in this deep dive is to try to break this all down
Okay.
and help you understand Mamata Machinery, their financial health, and who's running the show, all in the context of this IPO.
Sounds good.
So, ready to jump in?
Yeah, let's do it.
All right, so first things first. Who is Mamata Machinery? What do they actually do? And why should we care?
Well, what's really fascinating about this company is that it's not like some overnight sensation. They've actually been around since 1989, and get this, their machines are operating in over 75 countries.
75 countries. That's a huge global footprint.
Mm.
Not bad for a company that most people are probably just hearing about now.
Exactly. It really shows you that they're already a major player in their industry. So what they do is they are a leading manufacturer of machines that make those flexible packages you see everywhere.
Okay.
We're talking plastic bags, pouches, you name it.
Mhm.
They even make what's called extrusion equipment, which is used to create the plastic films and sheets that are used in those packages.
So they're kind of a one-stop shop for anyone who needs to package their product in these flexible materials.
Yeah, that's a great way to put it. And they're not just limited to India.
Right.
They have production facilities in both India and the USA, and their customers are all over the world.
That global reach could be a good sign for potential investors because it means that their revenue isn't tied to the performance of any single market.
Exactly. It's a really good sign of a company that's built for the long term.
So now let's talk numbers. Let's talk financials because everybody wants to know how a company is doing financially, especially when they're about to go public.
Of course. And Mamata Machinery's financials paint a pretty interesting picture.
Okay.
So the first thing that you'll notice is a strong growth in both revenue and profitability over the past few years.
Yeah. The documents show that their revenue has been climbing steadily, and a big chunk of that revenue is coming from exports, which makes sense given their global customer base.
Yeah, exactly. They're clearly tapping into those international markets very successfully.
Mm.
But there's a little bit of a twist to the story.
A twist. Oh, tell me more.
So while that overall growth looks pretty impressive,
Okay.
if you dig a little bit deeper, you'll see that their EBITDA margins have
Mhm.
actually fluctuated quite a bit. However, and here's the catches, their P8 margins, which is their profit after tax margins, have been steadily increasing.
So what do you make of that?
Well, what do you make of that?
It seems like they're doing a pretty good job at managing their costs
Yeah.
and becoming more efficient
Mm-hmm.
because their profit after taxes is growing,
Uh-huh.
even if their earnings before interest, taxes, depreciation, and amortization has been up and down.
Exactly. It's a pretty small detail, but it actually reveals something really important about how they run their business.
Yeah.
They're keeping those costs in check while they're still growing their bottom line. That's a sign of strong financial management.
Now, as you're looking through these financials, something might jump out at you.
Okay.
They have some pretty high inventory levels.
Oh, that's something that stood out to me as well. I mean, we're talking over 250 days worth of inventory in some cases.
So is that a sign of efficiency or is that a red flag?
Well, that's the million-dollar question, right?
Right.
It's definitely something you'll want to explore further. Are they strategically building up inventory in anticipation of maybe future demand? Or, are there some underlying issues with how they're managing their supply chain? It's definitely something worth looking into.
Okay. Now let's shift gears and talk about this IPO itself.
Okay.
And what's interesting about this IPO
Yeah.
is that it's what's called an offer for sale, meaning that Mamata Machinery isn't actually raising any new capital.
That's right.
Instead, it's the existing shareholders who are offering their stake to the public.
It's the selling shareholders who are going to be cashing out, and that includes some of the promoters.
Yeah, we should probably talk about one of these promoters, Mahendra Patel.
Yeah.
He's kind of a key player here.
Mm-hmm.
And it looks like he had a pretty interesting trademark license agreement with the company.
Yes, that's a detail that caught my eye as well.
And this agreement has been modified recently, which raises some questions about uh, how this might impact the company
Uh-huh.
moving forward.
Definitely.
So from what I understand, basically this agreement meant that he was getting a cut
Yeah.
of the company's sales
Yeah.
based on his trademark.
Based on his trademark
Oh,
license.
sissy.
And that arrangement's been modified.
Yeah.
So now the question becomes,
Yeah.
what does that mean for the future? Does it signal any kind of shifts in the company's ownership structure or their financial arrangements?
Yeah, it's something you'd want to dig into a little bit deeper as you're doing your due diligence.
Definitely.
Now let's talk about the elephant in the room. Risks.
Yeah.
Every investment comes with its own set of, potential downsides.
You're absolutely right.
And Mamata Machinery is no exception.
No investment is without risk.
Right.
And it's really important to understand what those are before you make any decisions.
So the documents point out a few key risks that are worth highlighting.
I think-
First off, competition in the packaging machinery industry is fierce.
Yeah, it's a crowded market, and there are a lot of players out there vying for market share, which could put pressure on Mamata Machinery's pricing and profitability.
So they can't just sit back and relax. They have to constantly innovate and stay ahead of the game.
Exactly. Yeah.
Another risk is their reliance on third-party suppliers for their raw materials.
That's a valid concern.
Any disruption to their supply chain, whether it's due to, global events, natural disasters, or even political instability, could really impact their ability to manufacture and deliver their products.
Yeah, their operations could be vulnerable to things that are just outside of their control completely. And there's one other risk that I think we should touch on.
I think I know what you're going to say. The potential for labor unrest in India,
Yeah, that's the one.
where a big portion of their operations are located.
Yeah. While they haven't had, any major labor issues in the past, they acknowledge that there's no guarantee that that'll continue in the future.
So even though things have been smooth so far, there's always the possibility that labor relations could become a problem.
Exactly.
So how do all these risks connect back to those impressive financials that we were looking at earlier?
Now, that's a really key question to consider, right? Any of these risks, if they were to materialize, could have a real impact on their, future performance. Like increased competition could squeeze their profit margins, supply chain problems could increase their costs,
All right.
and labor unrest could disrupt their entire production process.
So it's all connected.
Yeah.
It's not enough to just look at the numbers in isolation.
Yeah.
You have to think about how those numbers could be affected by the risks that the company is facing.
It's all about seeing that bigger picture.
Right. And speaking of the bigger picture, let's talk about the folks who are actually running the show, the leadership and the governance structure at Mamata Machinery. And this is where things get kind of interesting. Mamata Machinery is largely run by members of the Patel family, the founders,
Right.
a classic family-run business.
But it's not just a family affair.
Okay.
They've also recently brought in a new CFO and appointed several independent directors to their board.
That's a notable move.
Yeah.
It seems like they're making an effort to, broaden their leadership team and bring in some fresh perspectives.
Right. It could be a sign that they're really trying to improve their transparency and their corporate governance.
Yeah.
It's still important to keep in mind that the Patel family does still hold a significant amount of control.
So for you, does this mix of family and independent oversight, does it inspire confidence in their governance?
Well, it's a bit of a mixed bag, to be honest. I mean, family-run businesses, they can be very agile and they often have a really deep understanding of their industry. On the other hand, there can be concerns about transparency and the potential for, conflicts of interest.
Right. Especially when you think back to the, that trademark license agreement
Yeah.
with Mahendra Patel that we were talking about earlier.
Right, exactly. And it just highlights the importance of scrutinizing those related party transactions and just making sure that there aren't any conflicts of interest.
Yeah.
Having the independent directors can give you a little bit of reassurance, but it's still something to watch.
So we're starting to get a pretty detailed picture
Yeah.
of Mamata Machinery. But there's another layer that we need to peel back
Okay.
before we go any further.
I'm listening.
And that's their competitive landscape. How do they actually stack up
Yeah.
against the other players in their industry?
How do they fit in? Right.
Exactly. To really understand this company, we have to see where they fit
Yeah.
in the broader market.
That context is crucial.
Yeah, and luckily, these documents give us a fair bit of insight into the world of flexible packaging machinery.
Yeah, and I think one thing that really jumps out is that this industry
Okay.
is a lot more complex and specialized than most people probably realize.
Yeah, it's not just a matter of
Yeah.
churning out generic machines, is it?
It's about tailoring solutions
Yeah.
to very specific needs. Think about all those different types of pouches and bags that you see on store shelves.
Right.
Each one of them requires very specialized machinery to produce.
And it looks like Mamata Machinery has a whole range of products
Oh, they do.
designed to meet those needs.
Yeah, they cover a lot of ground. They have machines for making, everything from simple plastic bags to those really complex multi-layered pouches.
Right.
They're even involved in that upstream process, of film extrusion.
So it's like they've got their fingers in every pie
Yeah.
of the flexible packaging pie shop.
I like that. That's a good one.
Okay.
It really highlights one of their key strengths, which is that ability to provide those end-to-end solutions for their customers, They can handle everything from the raw material processing all the way to the final packaged product.
Now, the documents also give us a breakdown of the global flexible packaging market, both in terms of the types of materials that are used and the different applications for those materials.
Okay.
And it's clearly a global industry.
Oh, absolutely. And it's really being driven by some pretty powerful trends. So on the material side, there's a growing demand for sustainable packaging solutions.
Yeah, it seems like consumers are becoming more aware of the environmental impact of packaging. And companies are responding to that by searching for these eco-friendly alternatives.
And that's where materials like, biodegradable plastics
Right.
and compostable films come into play. And it looks like Mamata Machinery is positioning themselves to capitalize on this trend as well.
Yeah, in the updated prospectus, they've really emphasized their commitment to sustainable packaging solutions, and even mentioned that they've developed machines that are specifically designed for processing these new materials.
It's a smart move, Aligning themselves with such a major industry trend could give them a real competitive edge.
Now, if we look at the market by application, it's really amazing to see just how widespread the use of flexible packaging has become.
I know, right? It's everywhere.
It really is everywhere.
From food and beverages to personal care products,
Yeah.
even industrial applications.
And the documents mention, a few of these key applications, like pouches for snacks and ready-to-eat meals, tubes for lotions and creams, and even packaging for pharmaceuticals and medical devices.
And don't forget about, e-commerce, right?
Oh, yeah.
That's a huge one. All those packages zipping around the world.
It's a market that's ripe with opportunity, but it's also super competitive.
That's right. And that's the challenge for Mamata Machinery, isn't it? Not only meeting the demands of this diverse market,
Right.
but finding ways to set themselves apart from the competition.
So what are they doing to do that?
Well, the documents give us a few clues.
Okay.
They highlight their long history in the industry, their global reach,
Yeah.
and their focus on innovation.
And they're not afraid to brag a little bit
Oh, not at all. And they shouldn't be.
about their technological advancements.
Yeah. I mean, they were the first Indian company to introduce certain types of machines, those with stepper motor drives and microprocessor controllers.
It's almost like they're saying, hey, we're not just another player in the game, we're pioneers.
Exactly. And they're building that narrative
Yeah.
of expertise and innovation, which can be very persuasive, to investors.
Now, to get a better understanding of their competitive position, we really need to kind of zoom in on the specific markets that they operate in. And the documents provide some really interesting insights into both the global and Indian packaging machinery landscapes. What were your initial thoughts on this global overview?
Well, what really stood out to me was that Asia is really the dominant force in the flexible packaging market.
Which makes sense when you think about the broader economic trends, right?
Yeah.
Asia, especially in countries like China and India, has been experiencing this rapid growth.
Yeah.
And that's fueling a huge demand for all kinds of packaged goods.
Exactly. And within Asia, India is a major player.
Absolutely. In fact, the documents cite a report that projects the Indian packaging machinery market to reach nearly $6 billion by 2025.
Wow, that's incredible.
That's some serious growth.
It's huge. And it's not just about the size of the market, it's the factors that are driving it, right?
Right.
Things like rising disposable incomes, a growing middle class.
More and more people with money to spend.
Exactly.
And they're shopping in these modern supermarkets where packaged goods are...
Yeah, it's a perfect environment for the flexible packaging industry to thrive in.
Now, within India, the documents highlight a few key sectors
Okay.
that are driving the demand
Yeah.
for packaging machinery.
Uh-huh.
And two sectors really stand out:
Yeah.
the food and beverage industry and the pharmaceutical sector.
Oh, yeah. Those are heavy hitters for
Yeah.
the Indian economy.
The numbers are massive.
I know.
The projected growth for the food and beverage industry is expected to reach over $500 billion
Wow.
by 2027.
That's huge.
And the pharmaceutical industry is projected to hit $130 billion
Yeah.
by 2030.
Wow. So that translates into a massive demand
Oh,
for our
absolutely.
packaging solutions.
Because these companies are always looking for ways to improve
Yeah.
their packaging, whether it's extending shelf life, ensuring product safety, or even just making their products stand out on those crowded shelves.
And that's where Mamata Machinery steps in.
Right.
They're the ones that are providing those machines to make all that packaging possible.
It's a pretty compelling story, isn't it?
It is.
They're tapping into some of the most dynamic, fastest growing sectors
Yeah.
in India,
They're in a good spot.
but they're not just relying on domestic demand. They're also looking, globally.
Oh, absolutely. They have that global outlook.
Yeah.
And a significant portion of their revenue is coming from those export sales.
The documents break down their export revenue
Okay.
by region.
Mm-hmm.
And it's interesting to see just how diversified it is.
Yeah. Yeah.
They're selling machines to customers in the Americas, Europe, Africa, and Asia.
It really shows that they can compete on that international stage.
Yeah, they're not just winning customers in their home market. They're securing deals all over the world.
Very impressive.
Now, it does raise the question,
Yeah.
how are they managing the complexities of operating in so many different markets?
I mean, it's one thing to have a global presence.
Right.
It's another thing to manage it effectively.
Well, they mentioned having an extensive sales and distribution network with, offices and agents spread across different countries.
Yeah. They also highlight their participation in, international trade shows and exhibitions.
It sounds like they're really putting in the effort to build those relationships and raise their profile on a global scale.
Yeah, and they're not just focused on sales.
Okay.
They also emphasize their commitment to after-sales service.
Mm-hmm.
They have service engineers stationed in key markets
Oh, wow.
to provide support to their customers.
So it's all about building trust and ensuring that customers are satisfied.
Exactly. In such a competitive market,
Yeah.
it's not enough to just sell a machine.
Right.
You have to provide that ongoing support, build those long-term relationships.
Yeah.
That's how you create loyal customers
Right.
and ensure repeat business.
So far, this paints a pretty impressive picture of
Yeah.
Mamata Machinery's competitive position.
Mm-hmm.
They're well-established, they have that global reach, a strong track record, and a clear focus on innovation. Yeah.
I'd say so.
But as with any investment, there's always more to the story.
Oh, you're telling me.
And the documents reveal some fascinating and maybe even concerning aspects of their operations.
Okay, you've got me intrigued now.
So let's start with their manufacturing footprint.
Right.
They have two main production facilities, one in India and one in the USA.
We saw pictures of them in the prospectus, right?
Oh, yeah, that facility in India.
That place is massive.
Massive. It's over 450,000 square feet.
I know.
And it has a wide range of departments, including their own electronics department,
Oh, wow.
fully equipped paint shop, even a demo and exhibition center.
They've really invested a lot in their Indian operations.
Yeah, and it makes sense from a strategic standpoint, right?
Yeah.
India offers them lower labor costs and gives them access to a growing domestic market.
Yeah, but of course it comes with its own challenges.
Like the potential for political instability, regulatory hurdles, and limitations in infrastructure.
Exactly.
So these are all things that any company operating India has to deal with. And it's something that potential investors should be aware of.
For sure.
Now, their U.S. facility is it's a bit different.
Okay.
It's smaller,
Well.
and it seems to be more focused on things like product application, design, and customization.
Yeah, that makes sense because the U.S. market tends to be a little bit more demanding when it comes to customization and specialized solutions. So having a local presence allows them to, respond to those demands more quickly and effectively.
Now, here's something that I found particularly interesting.
Okay.
They mentioned plans to actually invest in what's called backward integration
Okay.
to try to improve their manufacturing efficiency and lower their input costs.
So tell me more about that.
So they're basically talking about setting up their own unit
Okay.
to fabricate and manufacture the frames for their machines.
Interesting.
And they even mentioned plans to equip this new facility with things like CNC laser cutting machines, bending machines, and welding machines.
So they're really trying to take more control.
Yeah, it's significant investment.
Yeah.
And it sounds like they're, maybe trying to reduce their reliance on those third-party suppliers that we were talking about earlier.
It could be a smart strategic move, but
But it also comes with risks.
it does.
Yeah. Anytime a company expands its operations, especially into something new like manufacturing, there are risks involved. Things like execution risks, cost overruns, and unforeseen challenges.
Investors are going to want to watch that closely, see how that plays out.
Right. Will this pay off, or will it end up,
Yeah.
dragging down their financials?
It's too early to say, for sure.
Way too early to say.
Yeah.
But it's something to keep an eye on
For sure.
as we're, evaluating their prospects.
Absolutely. And speaking of evaluating prospects, no conversation about a company's operations is really complete without talking about its people.
Right. That's right. I mean, the human capital, it's so crucial.
Right.
It's the people who are driving that innovation, executing the strategy,
Right.
and ultimately determining the success of a company.
And Mamata Machinery, being a family-run business,
Right.
has a very unique dynamic
Yeah.
when it comes to its workforce.
We've already talked about the Patel family's role, but the documents give us some insight into their broader employee base.
Okay.
They have over 400 employees, and it seems like they place a strong emphasis on training and development.
Yeah, they mentioned a dedicated training center
Yeah.
and their efforts to, really upskill their workforce. But there's a potential red flag here.
Yeah.
And it has to do with the fact that their workforce in India is not unionized,
Oh,
which can be a double-edged sword, right?
Yeah.
On the one hand, not having a union can give the company a lot of flexibility in how they manage their workforce.
Right.
On the other hand, it raises concerns about worker rights and potential exploitation.
Yeah, the documents actually acknowledge this as a risk, stating that, if employees were to seek unionization, it could lead to higher costs and potential disruptions to their operations.
It's definitely a risk factor for investors to consider.
It's a reminder that, even seemingly successful companies can face these challenges and uncertainties.
It underscores the importance of that due diligence, before making any investment decisions.
So we've covered a lot of ground.
We have.
But there's one more crucial piece of the puzzle that we need to examine before we wrap things up.
Let's do it. You're talking about the IPO itself, right? We've explored their business, their financials, their competitive landscape, even peeked into how they operate and who's in charge. Now it's time to see how they're structuring this IPO and what it could mean for an investor like you.
Exactly. We've dissected their business, their financials, their competitive landscape, even peeked into their operations and management structure. And now it's time to see how this IPO is structured and what it means for potential investors like you.
It's all about those fine print details.
So we know it's an offer for sale, meaning Mamata Machinery isn't getting any fresh cash.
Yeah.
But who exactly is selling and how much are they putting on the table?
The updated prospectus breaks it down. We see a list of who's selling, including some familiar names like Mahendra Patel and other members of the Patel family.
And each seller is offering a piece of what they own.
Right, and if you add it up, it's a pretty big chunk of the company. It's worth noting that the exact number of shares offered could be a bit different from the draft prospectus to the updated one.
That's because they're still tweaking things, reacting to the market, and what potential investors are saying.
It's a fluid situation. One thing that really stood out to me was the lock-in period.
Ah, yes, the lock-in. That's typical in IPOs, especially in India. It helps keep the share price stable after the company goes public.
Basically, it stops certain shareholders, usually the promoters and sometimes early investors, from selling their shares for a set amount of time.
So for Mamata Machinery, we see different lock-in periods for different groups of shareholders.
Exactly. The promoters have a longer lock-in period. You could see that as a sign of their confidence in the company's future.
It can also give investors like you some peace of mind, knowing that the main players aren't just looking to make a quick buck after the IPO.
Absolutely. Now, IPOs in India follow a specific process with rules about how shares are given out to different types of investors.
Mamata Machinery's prospectus outlines how they will allocate shares to qualified institutional buyers, non-institutional bidders, and retail individual bidders.
Each group has a certain percentage of shares set aside for them, and the allocation within each group usually happens through a process called book building.
It can get a bit technical, but basically, potential investors put in bids saying how many shares they want and at what price.
From those bids, the company and their advisors decide on the final offer price. It's a way to check the market's temperature and ensure a fair and transparent pricing process.
Now, for individual investors like yourself, there's this thing called the ASBA process.
Right, ASBA, which stands for Application Supported by Blocked Amount. It's a system India uses to make applying for IPOs more efficient and easier for investors.
So instead of paying for the shares up front, you just need to have the money set aside in your bank account.
Correct. They only take the money from your account if you're lucky enough to get the shares. It's a much smoother system. You don't have to worry about your money being tied up if your application doesn't go through.
The documents go into more detail about the IPO process, but I think we've hit the main points.
We have. We've explored Mamata Machinery's business, their financials, who they're competing with, even how they operate and who's in charge. And we dug into the specifics of their upcoming IPO.
So what's the bottom line for you? You've got a company with a global presence, strong financials, though we spotted a few things to watch, and a blend of family leadership and independent directors.
It's a story with potential. But like with any investment, there are risks. Competition is tough, they rely on other companies for materials, and there's always the possibility of labor issues in India.
And we can't forget about those high inventory levels and the changes to Mahendra Patel's trademark agreement. Those are things worth looking into further.
For sure. These documents give us a good starting point, but there's always more to discover. Before making any decisions, what other information would you dig into? What questions would you ask the management team if you had the chance?
That's the real value of any deep dive. It's not about having all the answers, but knowing the right questions to ask. Use the information we've uncovered as a springboard for your own research and analysis.
Remember, every investment is personal. It's about your financial goals and how much risk you're comfortable with. Do your homework and make choices you feel good about.
Okay, so let's get into the nuts and bolts of this IPO. We've talked about Mamata Machinery's business, their financials, the competition, how they operate, who's calling the shots. Now it's time to see how this IPO is structured. What does it mean for potential investors, people like you?
Yeah, let's get into it. It's all about the details, right?
Exactly. We know it's an offer for sale, so Mamata Machinery isn't actually getting any new money. But who exactly is selling their shares, and how much of the company are they putting up for grabs?
Well, the updated prospectus lays it all out. There's a list of the selling shareholders, including some names we've already talked about, like Mahendra Patel and some other members of the Patel family.
Right, so each of those sellers is offering up a piece of what they own. Right.
Exactly. And when you add up all those pieces, it comes to a pretty significant portion of the company. It's worth pointing out, though, the exact number of shares being offered might be a little different from what we saw in that earlier draft prospectus.
Right, they're probably still making some adjustments, seeing how the market reacts, taking feedback from potential investors. It's a moving target.
Yeah, it's a fluid process. One thing that jumped out at me was the lock-in period.
The lock-in period, yeah. That's something you typically see in IPOs, especially in India. It's there to help stabilize the share price after the company goes public.
Basically, it prevents certain shareholders from selling their shares for a set period of time. Usually that includes the promoters of the company, sometimes even early investors.
So for Mamata Machinery, it looks like they've got different lock-in periods for different groups of shareholders.
Exactly. The promoters, they usually have a longer lock-in period, which you could interpret as a sign that they believe in the company's future.
Yeah, and that can give potential investors a bit more confidence, knowing that the main players aren't planning to just dump their shares and make a quick profit right after the IPO.
Absolutely. Now, IPOs in India follow a pretty specific process, with rules about how shares are allocated to different types of investors.
All right. Mamata Machinery's prospectus details how they'll be allocating shares to qualified institutional buyers, non-institutional bidders, and retail individual bidders.
Yeah, each of those groups has a certain percentage of the shares set aside specifically for them. And the allocation within each group, it usually happens through what's called book building.
I know they can get a little technical, but can you break that down for us?
Sure. Basically, potential investors submit bids stating how many shares they want to buy and at what price they're willing to pay.
Good.
Then, the company and their advisors, they look at all those bids and decide on the final offer price for the shares. It's a way to gauge the market's appetite for the stock and make sure the pricing is fair and transparent.
Now, for individual investors, people like you, there's a specific process in India called the ASBA process.
Right. ASDA, which stands for Application Supported by Blocked Amount, It's a system they have in India to make applying for IPOs a lot smoother, easier for investors.
So you don't actually have to pay for the shares up front.
That's right. Instead of paying upfront, you just need to have the money set aside, blocked in your bank account.
Got it.
They only take the money if you're actually allotted shares. Much smoother. You don't have to worry about your money being tied up if your application doesn't go through.
Right. That makes sense. The prospectus has more details about the IPO process, but I think we've hit the key points.
We have. We've gone through Mama Machinery's business, their financials, their competitors, even how they operate and who's running the show. We've really dug deep into this IPO.
So where do we stand? We've got a company with a global footprint, financials that look pretty good, though we did see a few things that warrant a closer look, and that mix of family leadership and independent directors. That's a lot to take in, but not bad for our deep dive, wouldn't you say?
Yeah, I'd say so. It's a company with potential, no doubt. But it's important to remember every investment comes with its own set of risks. We talked about the competition, the fact that they rely on other companies for materials, and that possibility of labor issues in India. Those are all things to think about.
And we can't forget about those high inventory levels we saw and those changes to Mahendra Patel's trademark agreement. Those are details that deserve a little more digging.
Definitely. These documents give you a good starting point, but there's always more to uncover. So, now it's your turn. What other information would you want to know before making any investment decision? What questions would you ask the management team if you had the chance?
That's the real takeaway from any deep dive, isn't it? It's not about having all the answers. It's about knowing what questions to ask, doing your own research, forming your own conclusions.
Every investment decision, it's personal. It comes down to your financial goals, your risk tolerance, and really understanding what you're comfortable with. Do your research and make informed choices you feel good about.
I think we've given you a good foundation for doing exactly that. Thanks for joining us on this deep dive into Mamata Machinery. We'll be back next time with another fascinating look at the world of business and finance.